Hi everyone. Today we will talk about limited company in 2026. So, if you are starting a business in the UK and someone told you that just set up a limited company and pay yourself dividends to save tax, you might want to pause because in 2026 a limited company is not the best option for everyone. In fact, many new businesses owners actually end up paying more tax with more admin and compliance headaches. So, as an accountant, I see this mistake every single week with new directors. So, in this video, I will explain five types of people who should not start a limited company in 2026, the better alternative for each, and one situation where limited company still makes perfect sense. So let's see. Is limited company dead in 2026? Let's move forward. Starting a limited company is like previously it was like that take dividends and save tax. But in 2026, as I said earlier, things are changing. Let's see that what are the changes in 2026. The major affecting changes to limited companies are dividend tax increasing. Secondly, companies house stricter rules and higher compliance cost. Let's see each of these three in a bit detail. Okay, let's first see that what are the changes in the dividend tax increasing. So from 6th of April 2026, dividend rate increases. The basic rate band, which was previously 8.75%, has increased up to 10.75%. And the higher rate band, which was previously 33.75%, is now 35.75%. And this has results in dividend strategy become less attractive. Let's see that what are the changes in the company's house. As everyone know that from 18th of November 2025, HMRC has introduced that every person with significant control need to verify his or her identity with HMRC. So there is a compliance header which has been added on. Let's move forward and see about the higher cost. From February 2026, the incorporation fee has become £100. Previously, it was just £50. And for the confirmation statement as well, previously it was just £13 and now it has become £50. So even if company makes no profit, cost is still does exist. Who should not start a limited company? As I said earlier, I will tell you five types of people who should reconsider this. The type one, who want to withdraw all the profits, who want to literally withdraw everything. Let's take an example that the gross profit is 45,000 for sole trader and for a limited company as well. So there will be a 12,570 of personal allowance for a sole trader. So his taxable income will become 32,430 pounds. On this, there will be income tax of 20%, right? And there will be a class 4 NIC as well above the secondary threshold, which will be 6%. So there will be a total tax and NI of how much? Income tax plus class 4 NIC. It will be 8,432 pounds. Let's see the net take home income 45,000 minus the taxes, income tax, and class 4 NIC. It will be 36,568 for the sole trader. Let's see for a limited company. For a limited company of will take a salary up to personal allowance, which is 12,570 for which the company will have to pay the employer NIC on behalf of an employee, which will be above the secondary threshold of 5,000 at 15%. And later on, the company will have to pay the corporation tax rate, the corporation tax also, which will be 45,000 minus 12,570 minus this employer NIC into 19%. So the corporation tax will be 5,946 pound. Let's see that how much dividend is left we can take on. 12,570 we took as a salary. This is employer lines, and this is the corporation tax we paid. So available dividend is 25,349 pound. Let's deduct the 500 nil rate band for the dividend into 10.75%. So this will be dividend tax for the limited company. And here the net take home will be 45,000 minus employer NI minus corporation tax minus dividend tax. It will be 35,247 pound. Let's see the difference, that how much the difference is. Sole trader and limited company. So there is approximately 1,321 pound of benefit in sole trader. And that's too before considering the accountancy fees, before considering the compliance, before considering the paperwork. So let's now see the type 2 people. Type 2 people, people who want simplicity. In limited companies, if you subscribe for a limited company, you need to file company accounts annually. You need to file CT 600, which is corporation tax return annually. You need to run a payroll. If you take out a salary, you need to keep the dividend vouchers, all the dividend records. If you are set up as a company, and the people who want simplicity, the limited company in 2026 is not for them. Let's see the type 3 people. One client contracts. Those who are just working for a one main client, then they can face issues such as IR35 issues. Now, what IR35 is, I am not going to show in this video. For that, you can refer the another video which is already uploaded on the ACCC platform, from where you can get the knowledge about IR35. So, and there will be a employment like situation, and there will be a lot of compliance complications. So in this case also, sole trader would be the great fit. Let's see the type 4 people, who are the side hustlers, whose income is inconsistent and just trying to start a business, and who is doing a revenue in 1 month 200, the next month 1,200, and the another month, another third month nil. So then when the income is inconsistent, then setting up a limited company will be a lot of compliances and lot of compliance and admin cost as well. You will need to pay accountant for the annual accounts, your CT 600, your payroll, and a lot more, such as confirmation statement and your digital verification of ID in the company's house. So for all the side hustlers, freelancers, and consultants who has just started their business and thinking that we will set up as a limited company and save tax by taking dividend, in 2026, things are changing. Let's see the type 5 people. Fifth one is poor record keeping. Limited company require strict financial discipline. I know that sole trader has also introduced, if you are above the threshold, then you need to quarterly file and keep the digital records as well. But if you are below that, then the sole trader would be the beneficial one. Limited company require strict financial discipline, and problem arise when personal and business money mix. So what I would suggest that just be a sole trader, open another separate business bank account, and keep your personal and business transactions separately. Don't think that you will take everything from your business and at the year end we will figure it out. You might get the complications for S455 tax as well. And as I said earlier, if you want simplicity and if you are a poor record keeper, then limited company is not for you. Now, when limited company makes sense, if you want to retain profits, if you reinvest in growth, and if you scale the business, let's go to the type one who was just withdrawing everything and there only see the numerical example. Let's suppose in the previous case it was the take home of 35,247, but suppose let's the gross profit is 45,000 and you have taken a salary, you have taken everything and you have incurred some other expenses as well, and you retain 20,000 out of this, and you retain 20,000 out of this, and you do not take any dividend. So what you can do is you can keep the retain amount in the company itself. In the sole trader, there is no option to retain the amount. But in the company, you can retain, you can decide when you want to withdraw, where you want from, what type you want to withdraw, that you can decide by yourself. So the company, limited company makes sense when your motive is to retain profits, reinvest in growth, and scale your business. And you are not willing to just withdraw everything at the initial stage. So the key takeaway from this video will be limited companies are not dead, but they are not the default option anymore. Business structure should always follow business strategy. And the conclusion would be choose the right structure based on your profit levels, your growth levels, and your administrative capacity. Limited companies work best when used strategically. So don't choose a structure to save a tax. Choose a structure to build business. That was it, guys. And if you want more videos like this, then please do comment down and do consider subscribing. And if you're confused that what type of a structure need to be considered, then comment down sole or limited question mark, and I will help you out a free consultation. Bye bye, guys.